So I've been discussing with CoinGPT what the best portfolio might look like for dollar cost averaging into crypto throughout the bear market and for the next 2, 5, and 10 years. We've got a bit of a standard split in terms of the main assets, right? The bulk of the portfolio, the largest shares are going to be Bitcoin, Ethereum, and Solana as well here. But in this portfolio, I wanted there to always be a buffer in stable coins that are available to go in at any opportunities that we see come up. And then we want to get about 10% of the portfolio, or I would even go 20, 30% of the portfolio into riskier alts that we have a high conviction in and that we think could be great profitable investments for us. So coming down here, part of the portfolio is going to be just putting $100 in up front, but then $10 dollar cost average a day into crypto as well. So about $4 of that is going to be going Bitcoin, Ethereum, $2 into Solana, $2 into some alts, and $2 into USDC. 70% static, stays still, just compounding gains there. Opportunistic, buying on flat weeks, deploying aggressively on dips as well. Now, it's a great strategy, buy the dip. Traditionally, if you buy the dip on Bitcoin, you're going to perform better than if you were just standard dollar cost averaging. Buying on the RSI, very good as well. And holding back when Bitcoin dominance is high, where most of the liquidity has moved away from the USDT and Ethereum and altcoins back into Bitcoin. And this is where it gets a lot more interesting and where the upside potential might be in this portfolio as well. We want to go into these high upside altcoin picks, like Jupiter, obviously one of the biggest perp dexes on Solana. Immutable X, its own gaming chain, very good if the gaming narrative comes off. We all know Hyperliquid, of course. Stable coins at high APY. Now this is a small batch of altcoins here. It's only given us 3 here. I for sure would spread my altcoin capital over many altcoins. I'd have Jupiter, Hype, I would have JLP instead of Jupiter. I would have Ton in here. I would have Uni, potentially some Zcash. Now it has also suggested profit-taking strategy about essentially selling on runs and then buying on dips. But that's going to be very hard for us to estimate in a portfolio like this when it comes to these projections. But it's come to the projections here. So we can see that in 2 years of putting $10 a day in, we'd have total 7,500 almost invested in the portfolio. In a worst case scenario, we're down on that capital or slightly up on that capital in a bear case in 2 years if we're not back into a bull market. However, now this is where it gets interesting. If we do get into a base case bull market within 2 years from the next halving, 100K Bitcoin, 5K ETH, $200 Solana. Our portfolio, where we put 7,500 in, could be $25,000 to $40,000. If we hit alt season super hard, ETFs, then we might be expecting a 5 to 10x on alts, in which case it could almost be a 10x on the portfolio in just 2 years. Looking at 5 years, we'd have 20,000 invested. Worst case scenario, which is assuming quote unquote sideways, we're still at previous all-time highs. Incredible. And that's obviously the 5-year business cycle comes into play as well. Double our money, triple our money back. Base case here, not even a bull case, base case of 200K Bitcoin, $500 Solana, 150 to 300,000. Now, 10 years, how could it look? 37,000 invested. In a bear case, we're up 3 to almost 7x up on the portfolio. On a base case, 33x. That would be similar to the current market cap of all of crypto, getting similar to the gold. Which now that depends on your outlook. Do you think Bitcoin 500K in 10 years, or do you think Bitcoin 1 million in 10 years? But in which case, we can just see that if we are still betting on the downfall of the dollar system, and things like debasement continuing and inflation obviously increasing, and we get the Ray Dalio banana hockey stick that everybody expects, then it is entirely possible. Look at where we've come from in Bitcoin in the past years. 13 years ago, it was $100 a Bitcoin. Now this is interesting as well. I asked it to suggest about things like staking the capital and getting an APY, and also about dollar cost averaging versus having a profit-taking strategy rather than just holding the assets from now to the end. So essentially buying the lows and selling the tops, right? It's going to either reduce our cost basis by 15 to 20% or increase our profit from 20 to 30%. When it comes to reinvesting profits and yield, adding another 10 to 15% annually is insane. That's the general stock market that you would be trying to beat there. Institutions would want to get that amount of capital. 10K port at a 50% bull return becomes 15K base for the next cycle. It's true, in crypto, if you can take slow and steady gains across the years, then you can have exponential gain and the results can be incredible. The ability to buy Bitcoin, for example, at 15K and then sell it at 125K and then to buy it back at 40K a couple of years later, you manage to 10x your portfolio, and then you've managed to get back in at 3x less the price. So now you have triple as much Bitcoin again. Now, what could break this strategy, and what are the risks to having this? Part of it is through the liquidity of doing a small account. There are for sure going to be trading fees that will eat into the profit. Narrative shifts, yeah, of course. Rebalancing risks, again, it is additional fees as well. Being down potentially 60% in the bear market, it is entirely possible we do go down another potentially 30 or 40% is possible decrease in Bitcoin price. Only a 2x run in the bull market on altcoins, yeah, that would destroy the strategy. But I don't think a 2x on things like Solana in a bull market are going to be possible. In the last cycle, we did what, $9 Solana to 240 or 190 or something like that. I don't remember off the top of my head now. And major narrative shifts like AI taking dominance over things like Bitcoin, Ethereum, or any of the altcoins that we've picked like Immutable X. So what do you guys think about a portfolio like this? What are the assets that you guys would be purchasing for your 2, 5, and 10 year portfolios? And if you guys want to use CoinGPT, there's a link in the description to sign up.